Good morning, everybody. This is the live market open for Tuesday. It's May 3rd. I'm Yohay. I'm a Forex Crunch and Market Movers podcast, doing the show as usual for FX Street, where we have a clear trend in markets. As usual, we'll talk about recent developments, cover various charts and levels, discuss the next 24 hours, and of course, answer your questions. If you cannot see the chat box alongside the screen, as usual, please go directly to the chat box and this address, tlk.io/fxstreet-forex-live-video. Okay, let's go directly to the charts. I think they speak for themselves. The US dollar is suffering a massive sell-off. It's dumped, it's dropped, it's downed, whatever verb you want to use. Good morning, Fabian. Morning, other people here in the room. JM, Kerry, FX Ambassador, Roland, Dinda, Jax. Hi, everybody. So here we are. 115.68 was the high. We're actually scratching even higher levels as we speak. So yesterday we had the euro dollar challenging, sort of battling 114.60. Well, last week, then we had a break above this line. And for a while, it seemed that we're settling just under 115. Then we had a break higher. Now it's a new morning, a new US dollar sell-off, and we're off to higher ground. Currently, we're at the highest level seen since August of 2017, when we had this spike all the way alongside the crash in the Chinese stock market to 117.12. So we could mention some lines between where we are now to 117.12, but I think really the really strong resistance is only at 117.12. Support is at 115, which was the high seen in October. Okay, dollar yen. Well, I'll go back to pound dollar soon. Dollar yen also here we're seeing an extension of the crash. We had dollar yen settling just above 106 during yesterday, between sort of 106.10 and 106.70, and now a new session, a new fall of dollar yen. This time it's not correlated with the Japanese stock markets, just because Japanese stock markets are closed. Okay, but in general, it's a big, huge weakness of the U.S. dollar. Good morning, Sinatra, and we're seeing it also expressed in dollar yen. Okay, so of course the very round level of 105 is there to watch out for. It's a strong support, because that's a level that many suspect the Bank of Japan could intervene. Okay, remember, if they do intervene, they'll have a tough time against markets, because markets have been defying the Bank of Japan for quite a few months. So I think the Bank of Japan will only intervene when the trend changes, after things have settled down just a bit. And also the pound, no worries about Brexit, no worries about slowing UK economy. The pound is just gaining more and more ground. It was sort of capped by 147, but look how the trend, earlier in April we talked about 140.50, then we had the swing go up to 140. That was the bottom. Since then we're going up and up. The pound is probably thinking, well, there's not going to be any kind of Brexit, and of course it's the weakness of the US dollar. So in order to see the next levels, we have to widen out just a bit. Resistance here is at 148, which was the bottom here in December. Okay, and also the line that greeted Mark Carney when he began his job. Anyway, this is the next line to watch. Now 146.50 turns into support. Okay. Question here. Good morning, everybody. Dollar CAD, the same trend, falling under 125, a round number. Okay. It held above this line for some time. I must say this time it is not correlated with oil prices. Well, just a bit, but oil prices did not reach new highs. Okay, they got close to $47 and then they fell to $44.50, now rising once again. So maybe the rise of the last hour or so can be attributed to oil prices. I mean, it's a general risk on move in markets, if you wish. No, sorry, a dollar sell-off party in markets. Also oil is rising, and the Canadian dollar is taking advantage of this. But we've seen it's mostly the weakness of the US dollar and less a correlation with the Canadian dollar on dollar CAD. So we fell under 125. 124.74 is the current level. Again, if we zoom out, it's the highest level for the Canadian dollar against the US dollar since July. Okay, so it's another low. During last summer, the Canadian dollar was suffering, the US dollar was strengthening. Further support at 123. 124, I would say, and then further support only 120, 120. Anyway, it's quite a spectacular fall. The Canadian economy managed to move away, to diversify away and enjoy some strength thanks to the weakness of the Canadian dollar. So they became less dependent on oil. It also helped cushion the lower price of oil, because remember, oil is not priced in Canadian dollars, it's priced in American dollars. So, but once we've seen things, well, now we're already, since the peak in January, we're 2,200 pips lower on dollar CAD. Okay, now let's talk about the exception, the Aussie dollar. Aussie dollar, well, let's zoom in. So what we're seeing here is what we had earlier, just 2 hours ago, 3 hours ago. The Reserve Bank of Australia decided to go for the dovish side and to cut interest rates. So interest rates in Australia are now 1.75 instead of 2%. It was not totally priced in. Also, a no cut was not priced in. As I mentioned yesterday, it was sort of 50-50. I did not expect them to cut. I thought they would just hint about or talk about a cut next time. Anyway, they went for the cut, and it was not a huge surprise, but not also no cut would not be a huge surprise. The jury was really out. On one hand, inflation figures in Australia last week came out worse than expected. That was the official trigger for the cut. And in addition, the Reserve Bank of Australia is certainly not happy with the strength of the Australian dollar. On the other hand, there are worries. Okay, they talked about the housing market in Australia, especially in Sydney, is quite hot, even bubbly. So they wouldn't want to cut interest rates too much to encourage this speculation. In their statement, they said they took note of the Australian real estate market, and they also took note that China is doing its good efforts to balance near-term growth. On the other hand, they still expressed worries about global growth. Anyway, what we're seeing on the chart is Aussie dollar. There was some speculation, rumors, wrong leaks at least, that the Aussie dollar, that the RBA will not cut or something like that. So we moved out of range all the way to 77.20, 77.18, just to fall all the way down. The low has been 75.55. Now we are seeing some kind of a recovery. I would say it's thanks to the weakness of the US dollar more than anything else. Kiwi dollar, well, it also reacted to the rate cut in Australia. Okay, so we had the Kiwi dollar moving all the way up to 70.50, more or less resistance, even very nice technical play by the Kiwi dollar. So we moved all the way to 70.50. We fell, the Kiwi dollar fell with the Australian rate decision, but now it's recovering back to 70. Yeah, okay. Dollar Swiss, we're seeing how the weakness of the dollar is playing out also here. 95.20 under this line of, 95.20, getting closer to the round level of 95. I'm sure that the Swiss National Bank is happy to see the euro strengthen against the dollar. That means euro Swiss is also higher, now ticking above 110. So, well, very narrow range here of less than 20 pips, but anyway, it's closer to the upper end of recent ranges, or at least getting away from the bottom. Euro pound, this is relatively stable. Euro and pound, and to some extent also the yen are, yen a bit less, but moving in tandem, the euro and the pound. we managed to climb back above 78.30. We're seeing how 78.30 works as a separator of ranges. 77.40 worked nicely as support. It worked as support in the past as well. 79.30 is resistance on the top side. Currently no clear direction for this pair, but we have some data later on. Dollar yen, of course, euro yen, of course, this is the big crash because of the BOJ disappointment last week. They did not do anything. We found support here at 121.66 and not for the first time. Okay. And this morning we're seeing euro yen sliding. The yen is showing more strength than the euro, but this is not, everybody is celebrating against the US dollar. Anyway, resistance at 124. So I would say the wider range is 121.65 to 120. No, sorry, 123. 121.65 to 123. Okay, pound dollar. Here we are seeing a fall, so maybe yeah, the yen is still the king. 155.75. We had a rejection here at 156.60. An old line of support now turns into resistance. Okay. Anyways, further support at 154, 151.80. Good morning, everybody. Jake, Luca, good to see you all here. So all in all, we're seeing the yen remaining king of the hill. Okay. The biggest moves are over there, but also in general, currencies are continuing celebrating against the US dollar, with the only exception being the Australian dollar. Even the Kiwi that followed suit, went alongside the Aussie dollar sliding lower, is recovering, and it's closer to getting balanced once again. Okay, so let's talk about, well, we're seeing here markets are positive. Of course, no rate hikes in the United States. Further support from central banks, including what we had now from the Reserve Bank of Australia, is good for markets. So it's sell the dollar now, think later. But there is one real reason for selling the dollar. Yesterday we had the ISM manufacturing PMI. It missed, okay? It came out at 50.8%, and employment was negative. I wouldn't say it was all that bad. I mean, for the Fed, first of all, the manufacturing sector is relatively small. Secondly, it's we are seeing, it was already in contraction territory, and it remains positive. Okay, it was expected to stand at about 51.6, and it's 50.8, so it's not a huge disappointment. Employment did improve. It's still in contraction under 50 points, but it did improve. And prices jumped from 51 to 59. Now, if the Fed is looking for signs of inflation, you can see it coming from there. So it's not all that bad. But the headline was weaker than expected. Employment still remains negative, and that's it. The first hint for the non-farm payrolls on Friday. Markets were already looking for reasons to sell the dollar. They got more reasons. We've seen that yesterday, and an extension of this today. Okay. Other figures we had are Aussie building approvals beat with 3.7%. It didn't have an impact. Markets were waiting for the RBA. On the other hand, this was balanced with the Chinese PMI missing just a bit, also with 49.4, just under growth, just in contraction, but not in growth. And of course, the big news we talked about, RBA cutting the interest rate from 2% to 1.75. They did not give us hints about the next moves. Many commercial banks think it'll be quite gradual. Okay, I see questions here. Do you think traders may start targeting the Kiwi as the next one up for rate cut? Asks Luca. I think so. But today we have quite a few events that could shape the picture for the Kiwi, so I'm not sure. The RBNZ had its rate decision not that long ago, actually last week, together with the Fed on the same day, and they decided not to cut rates. So until their next meeting, they have lots of time to think. So yeah, I mean, the in New Zealand, the interest rate is 2.25. So there's also lots of room to cut there, at least some kind of race to the bottom with the RBA. Okay. About US data from CNBC, ECB study evidence suggests information leakage on key US data release. Yeah, I've seen that report yesterday. It's quite surprising that the ECB conducts a study on leakages on US indicators, but they did do a serious study, a serious research, and they did find that on key releases, it's not just the second tier ones, it's mostly private ones, not government ones, okay? But like that, but ISM manufacturing, non-manufacturing PMIs, which are important, seem, according to this research, there are some leakages there. I always talk about leakages around UK data. Why am I talking about that? Because we see movements in the pound towards UK releases, okay? What they found is more on contracts on mini S&Ps or things like that, things related to stock markets, less than currencies. So anyway, yeah, it's a very interesting piece of news. Anyway, the ECB is now in trouble with the US, well, getting into trouble with the US after conducting a fight with the German finance ministry. Lots of criticism. I mean, the ECB wants governments to do more, and Germany, some German politicians are criticizing what the ECB is doing. We have another question here. A chart. Let's share it with everybody. Lucas says euro dollar and the dollar index are at a key inflection point here. So yeah, so we have that's a nice chart. Support for euro dollar, then even after the fall, it turned into resistance, and also we're meeting resistance here on this line. So yeah, thanks, Luca. The euro dollar is hesitating on the way up. Okay, remember the ECB is doesn't like the strong euro. The ECB has a very, very loose monetary policy. This currency is a bit lagging in comparison to other currencies. Let's see if it's a bounce or a break. On the other hand, the Eurozone has a positive current account surplus, and that keeps the euro bid. Okay. So thanks, Luca. Yeah, nice nice work indeed. Let's see how things move. Let's take another look at euro dollar. No stopping for euro dollar. Continues on the way up, so maybe we'll have a break. Remember, 117.12 was the high in August 2015, actually the highest level of the year. Okay, so let's see what's expecting us today, and I'll answer some things we talked about. So first of all, regarding the UK, we have manufacturing PMI at 8:30. Let's look at what's expecting us. This is, of course, the FX Street calendar on Forex Crunch. So expectations are where did it run away to? Here we go. Sorry. Anyway, it's expected to rise from 51 to 51.2. The manufacturing remains the weaker link in the United Kingdom. We will see some impact in the 1 hour around the release, so between 8 to 9 GMT. I expect some action, some market front-running leaks, rumors, whatever you want to call it, and then a reaction. But even if the figure is terrible, we might see after an initial wobble, you could see the pound moving back up. And so remember, the impact could be strong, but short-lived, okay? Another thing I didn't mention here, but for those trading the Australian dollar, watch out for the budget release at 9:30 GMT. Could have more impact after the RBA. We also have producer prices in the Eurozone, expected to rise 0.1 month over month. Most times with these releases, they disappointed quite badly. so they could disappoint once again. Remember, inflation is very poor in the Eurozone, but the ECB sort of a bit reluctant to do more. Okay, what else do we have today? We have Loretta Mester of the Cleveland Fed speaking at 2:30 GMT. She leans to the hawkish side. We've seen that even if some Fed doves turn hawkish, it's just not enough for the dollar, because we know that Yellen remains dovish, and also Dudley remains dovish. And then we have sometime in the afternoon, 2, 3, 4 GMT, it's never an exact time, we have the milk auction in New Zealand, so it can also impact the Reserve Bank of New Zealand because well, last time we had it rise for a second consecutive time, 3.8. We don't have official expectations, but if we see it rising once again, it can push perhaps the Kiwi above the 70-50 line and push the RBNZ to cut interest rates. Okay. And for the Canadian dollar, we have the Bank of Canada's Stephen Pelot speaking at 4:30 GMT. That we heard the Bank of Canada has not been jawboning too much about the currency, but with this kind of strength, and we might hear them beginning to talk about it. So the Canadian dollar is running ahead of oil prices. So perhaps the Canadian dollar is too strong for the Canadian economy, and we might hear them talk about that. And for those trading the Kiwi, it's a double feature day. I know not many of you are, but the pair does have a nice technical behavior. And at 10:45 GMT, we have the employment report in New Zealand. It's a quarterly employment report, unlike many other countries. It means it has a bigger impact upon any release. So employment change. Let's begin with this. It advanced very nicely last time, 0.9% this time. For the first quarter of 2016, a rise of only 0.7 is expected, so a bit more moderate. The unemployment rate was 5.3%, which is really good. It's expected to rise just a bit to 5.5, but also watch out for the participation rate, because if the unemployment rate rises together with the participation rate, it's not a big it's not a big deal. But if we have the unemployment rate rising to 55 and the participation rate falling or stagnating, it's not good news. So we'll talk about this, of course, regarding in relation to the U.S. non-farm payrolls on Friday. Okay, so yeah. Also worth watching there on this report is the labor cost index. Remember, wage inflation is something also other countries are looking for. Yeah. Okay, and we have a speech by Dennis Lockhart at 11 p.m. GMT. Shouldn't be that important though. Okay, because we already heard from him several times. In the meantime, euro-dollar continues advancing, 115.82. No stopping. I guess euro-dollar made a break above that point of inflection, the key inflection point that Luca mentioned, right? It's not only related to the euro, also the pound continues edging higher, getting closer to the round number of 148. Okay, there's some way to go. And dollar yen frustrating the Bank of Japan, digging the bottom, getting closer to the round 105 level, which some analysts expect the Bank of Japan to intervene. Some talk about dollar yen falling below 100. I'm just saying that they are unlikely to lose another battle against markets and trying to catch a falling knife. They would rather work when things are more consolidated and when the trend is more with them, not against them. Okay. But we are seeing even the Australian dollar regaining the 76 level, still negative on the day, but looking better. And the Kiwi has already turned positive on the day, back to 70.27, getting closer to 70.50. So quite a busy morning today. Okay, in markets, basically it's just a clear trend. Sell the dollar and now think later. Okay. Any further questions? This is, of course, rate hike expectations. According to the CME Group FedWatch, one of the main drivers, if not the driver of dollar weakness, is the Federal Reserve decision last week. On one hand, they did acknowledge some improvement. They did talk about the global, they did remove the phrase that expresses worries about the global economy. And on the other hand, they did not give us a hint about the rate hike. They said, we'll consider everything in the next meetings, in a plural, not in singular, like they did in October when they said the next meeting, and they were talking about the rate hike in December. Okay, so according to bond markets, it's 13% chance of a rate hike. We did hear from John Williams of the San Francisco Fed saying that bonds are priced too high. That means, in other words, that expectations for rate hikes are too low. But we've heard from him such comments in the past. Not related to bonds, but comments about the general situation. It was relatively more hawkish, and we know that this does not reflect the opinion of Yellen and others. Okay. Yeah, okay, same levels here. Let's talk about other events we had so far this week and we have coming up. So on Monday, yesterday, we had the ISM manufacturing PMI. It was weaker than expected, sort of added insult to injury, added fuel to the fire of the big dollar sell-off. And then Draghi talked and didn't say anything really meaningful. The Australian RBA cut interest rates. That certainly hurt the Aussie. Chinese PMI was a bit of a miss, but nothing terrible. Yeah, we have overnight Australian employment data. No, we didn't talk about that. And ADP non-farm payrolls and US ISM non-manufacturing PMI. So tomorrow we have two big hints for the non-farm payrolls, and of course on Friday the NFP and the Canadian jobs report. I see your question. Fed, BOJ, RBA, RBNZ, S&P, recent rate changes. Bank of England next. No, I think the Bank of England. First of all, there's just one thing on the Bank of England's mind and the UK government's mind, on many people in Europe as well. The EU referendum on June 23rd. Okay, so that's a really big event. The the Bank of England has contingency plans, or at least working on them, and they could slash interest rates in case the UK decides to leave the European Union to sort of cushion market turmoil. We know that, there's no uncertainty about how this will play out in terms of trade. The UK has 2 years to leave, and then in this time they can renegotiate deals, and it's unclear what the real impact on trade will be. But we know that, at least in the short term, that's easy to say, that the impact on the British pound will be negative, the impact on stock markets will be negative. So some support from the central bank, even though in theory it could hurt the pound even more, that's on the cards. So if we have a vote for Brexit, which will come as a surprise, at least now it seems unlikely. Cannot rule it out, but it doesn't seem quite likely. There are better chances than not that the UK will stay in. In this case, the Bank of England will cut rates. If they, assuming we will not have a Brexit, will have a small majority for the Remain campaign, then I don't think anything. The Bank of England will continue not doing anything. Actually, Mark Carney is in the job for nearly 3 years, hasn't changed policy once. Okay, Sounds like an easy job for a high pay. Okay, following on the Euro look, dollar index completing third drive, but no momentum confirmation. Bottom near. Okay, thanks, Luca. Let me share that with everybody. Okay, so we have, this is the slide of the dollar index along this slippery path dating from February, right? Okay. When the US dollar was at its peak, and then we're seeing it slide against this line quite a few times. Okay. It's a third drive, yeah. So, yeah, let's see if we have a break under this line or not. Anyway, thank you, Luca, for sharing beforehand the euro dollar chart, now dollar index chart. Remember that dollar index is mostly composed of the euro for historic reasons. So, yeah, we're seeing a great correlation. Sorry, I told you we have the Australian employment data. That's not tonight. That's on Thursday morning. Let me just verify that. Anyway, and we'll take another look at the charts quite soon. A few countries this week are on holiday for various reasons. It's May Day, the Ascension, some Catholic holidays. In Japan, it's other stuff. In China also. So it's not full activity, but okay, I'll check that out. Anyway, let's look again at the charts. Okay, well, euro dollar takes a break 115.77. Okay. Other thing we have on the agenda today is the primaries in the great U.S. state of Indiana, and there's a chance that Trump will get even closer, and also Clinton closer to the nomination. It seems like Trump against Clinton. Bernie Sanders is already beginning to, last week began conceding, saying that he's going to play until the end in the primaries, but his goal is to influence the party and sort of accepting that Clinton will be the nominee. And the Republican Party, the fight is still going on, a much fiercer battle, but it seems for them a bit. The Never Trump campaign finds it hard to sort of get around Ted Cruz, which is also quite problematic. Anyway, Ted Cruz and John Kasich, which are still running against Trump, don't have a chance of reaching 50% majority, not even in theory. Trump does have a chance to wrap it up in the first ballot to get an absolute majority of delegates. If he doesn't get an absolute majority of delegates, it still makes sense. If you want to play fair, to nominate him, but the party hates him so much. So anyway, so far we're not seeing a big market impact. But as we get closer to the elections, the very different views of Clinton is more mainstream continuation, the certainty, the devil we know, and Trump talks against trade deals, and he basically says everything all the time to everybody, fooling everybody. So I don't know, it's sort of a more scary for markets, not only for markets. Anyway, I see here another question from Fabian. Given the present macroeconomics and central bank policies, USA is still the best performing economy. USD is still the only currency with a long-term positive outlook. Isn't this so aggressive selling just a speculative coordinated effort to buy the USD and sell the better price? Who would be interested in such speculation? First of all, a great question. Yeah, indeed. The U.S. economy is looking a bit better than other economies. because unemployment is low, growth is still here, but on growth we've been seeing signs of weakness recently. Okay, so Q4 growth was not so good, was only 1.4% annualized, and Q1, according to the preliminary release, is only 0.5. So even on growth there are some doubts. Okay, so currently for Q1, UK growth and even Eurozone growth are stronger. Okay. In addition, markets are moving by speculation. Okay, so if there was a drive of monetary policy divergence with the Fed gearing, ending QE, then preparing us for rate hike, then raising rates, and with the projection of even more rate hikes, and on the other hand, the Eurozone going from worse to worse, cutting interest rates deeper, adding more QE. And that was a speculation and always expectation that the Fed will do more tightening and the ECB will do more loosening. Now the ECB seems stuck, okay, on the loosening path, and the Fed seems stuck on the tightening path. So with this speculation going on, even though the Fed could still raise rates this year, and the ECB could still drop helicopter money, which still is a very wild idea, but the mere fact that they're talking about it, even though they're denying it, of course, doesn't mean it will not. I mean, it means that they're sort of checking the atmosphere anyway. But at the moment, with sort of the Fed is not expected to do much, the ECB also, and both are on different directions. So we're now seeing some kind of unwinding of the speculation. What we're seeing in markets in recent days is more related to the US dollar, to the Fed expectations, and not anything else. Okay. So yeah, so US economy, best performing economy, not as strong as it looked a few months ago, and yeah, we of course markets are getting a bit carried away. With this I do agree. US dollar sell-off is a bit exaggerated. We have I published an opinion by Barclays on Forex Crunch that they think that the USD sell-off is a bit exaggerated, okay, towards the non-farm payrolls, and the non-farm payrolls could be an opportunity to change direction over there. Okay, so yeah, so there are of course opinions, and I also think it's a bit exaggerated. Markets getting ahead of themselves. Yeah. Okay. Let's take another look at charts before we get to the wrap up for today. Yeah, we're at the highs now. Another comment, I agree, dollar should be repriced down on recent economic indicators, but the punishment seems just too hard. Yeah. I also agree. I mean, if you look at euro dollar, it does not reflect the strength of the Eurozone with all the trouble going on here. Okay. 3 days after the referendum in the UK, we have elections here in Spain, and also lots of uncertainty over there. Okay. Any more questions? No, I think maybe we'll get to the wrap up. Yeah, okay, so this is the wrap up of the live market open for May 3rd. It's a Tuesday and we're seeing a big US dollar sell-off. And the wrap up, markets are positive. They like the support from central banks. Most recent support came from the Reserve Bank of Australia, which decided to cut rates. Not a full surprise, but not fully priced in. So the Aussie dollar is the only one that is losing to the US dollar at the moment. So let's begin with the exception. Aussie dollar down on the day with this rate cut. low inflation in Australia, and also some strong currency triggered a rate cut. 76.13 is the current level, down on the day. Support 75.33, resistance 77.40. Quite a lot of action over there. But this is the exception, not the norm. US dollar is suffering a huge sell-off. Currently, when euro dollar 115.84, reaching higher levels by the minute. Resistance, real resistance, is only at the swing high of August 2015 of 117.12. Support is at 115, the level it had a hard time to break, or at least it paused under it. Okay, pound dollar. Who cares about the Brexit? That seems to be the theme, or no chance, or but it's mostly sell-off of the US dollar. A break above 146.50. Next level to watch 148. Dollar yen. It's a holiday. It's a bank holiday in Japan, so we are not seeing any correlation with Japanese stocks, but the yen is strengthening even further. Remains the king, makes the biggest advance against the US dollar. Once again, we had, after the Bank of Japan did not offer further stimulus. So 105.65 is the current level. 105 is a level watched by many people as a level that the Bank of Japan could intervene. Dollar CAD. Oil prices are a bit higher today, but it's mostly the US dollar weakness. 124.75 under the 125 level. 124 support, provides support. Aussie dollar we mentioned, and the Kiwi dollar. It got carried away. It did react to the RBA rate cut, so the neighbors did have some influence. But now with the US dollar weakness, we're seeing it recover. The range here is 69.50 to 70.50. Further resistance 72, support 68.20. Okay, let's cover events we had yesterday. One of the reasons for the fall of the US dollar is a weak figure, a weak ISM manufacturing PMI. Wasn't that terrible. Inflation does seem to pick up there, and it's still in growth territory. But the markets want to sell the US dollar, and that's what they do. Chinese PMI, also worth mentioning, missed just a bit, but not something terrible. Okay, today we do have a busier day than yesterday. At 8:30 GMT, we have the UK manufacturing PMI. This could come worse than expected because manufacturing has been the weakest link. We might have it fall under, but remember, we might have a strong effect on the pound, but it'll probably be short-lived. All right. A speech by Federal Reserve's Loretta Mester at 2:30. She's a hawk, so we're not expecting any surprises. We have a focus on the Kiwi today with the milk auction somewhere in the European afternoon, and at 10:45 p.m. GMT, the New Zealand employment report. Remember, it's a quarterly one. I think that if both figures, the milk auction, which always moves the Kiwi, and the quarterly employment report, which is even more important, if they both go in the same direction, if they're both positive, we could see a big break to the upside riding on US dollar weakness. But of course, if they both disappoint, we could see the Q follow the path of the Aussie and back down just a bit. Also worth mentioning for the Canadian dollar, a speech by Stephen Pelosi. Let's see if he becomes a bit more edgy with the Canadian dollar. They do not want strength over there. Pairs to watch today, question by Jax. It's clearly the Kiwi, as I just mentioned, but the Kiwi, because of the weakness, because of the both events, the milk auction and the quarterly report. But I would also watch out for euro dollar and dollar yen, and well, all currencies in general. But perhaps dollar yen would be after the Kiwi because it has reached low levels, and we could see some kind of intervention over here, or at least fear of intervention, which could also drive prices. So basically, it's US dollar sell-off, and also euro dollar, of course, the world's most popular currency pair at the highest levels in 9 months. Okay. And Fabian wants to see the slides. Next week preview slides. Yeah, so These are the things we already had. Yeah. And yeah, the main event for the week is, of course, the Elam from payrolls on Friday. Here I have a mistake. It's not Australian. I have to check that out once again. Anyway, as I said, the Kiwi is the main currency pair to watch. And after that, sorry, no Australian employment data this week. That was a wrong figure. Anyway, thank you very much, everybody, for coming. I hope we have lots more action today, like continuing today, like we have already and like we had yesterday. And yeah, see you all tomorrow. Tomorrow we have a busy day with US indicators, and in general, let's see if we have further breakouts in major pairs and elsewhere. Okay, so that's it for today. Good luck, thank you, and bye-bye.